Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a read through of the disclaimer on screen. Everything in this video is general in nature. None of it should be taken as any form of personal advice. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of it is relied upon as any form of advice at all. It is just general in nature only. Very quickly, I do want to pause before I get on with my video, which is to say, all of you that are in lockdown, including myself, we will get through this, and I do hope that wherever you are doing as well as you possibly can. It's a hard situation, I fully understand that, and I really do hope that you and your family do as well through this process as we possibly can. So also with that in mind, it's been a fairly low week in terms of data that's really driving currencies, and I've been pretty strong in my view around the US dollar. I've been pretty long and have enjoyed being long because it's worked in my favor, and I hope it has worked in your favor too. Again, not advice, but it's certainly been something to be aware of. Over the last 4 months, it's been the trade to be in. But as always with FX, you should always be reviewing and reviewing regularly. And I think right now, considering things are a little bit low in data and a little bit low in Fed speed, etc., that needs to happen. I'm still, before I go further, I'm still very, very much of the belief that in the interim, the US dollar is certainly the place that I still want to be. But let's have a look at what's going on, and particularly in the risk-sensitive currencies, Aussie, Kiwi, CAD. You could even argue the Scandos as well. They're all in the same boat. They've been under immense pressure, but let's go through particularly Aussie US, Kiwi US, also US CAD, and then also having a look at Euro Dollar. I think those are very, very interesting pairs right now in terms of what's going on. Aussie particularly hit an 8-month low last week, and that was a real highlight of what I've been suggesting, which is that when the Australian dollar was getting all of the Aussie data, unbelievable GDP, very, very strong employment growth, all of those kinds of numbers that were before the lockdowns going on in New South Wales and Victoria, just couldn't get through 78 cents. And that for me was a big, big weakness, big selling signal, and away we've gone. And we've dropped all the way down, touching into 72. But again, what this video is about, as I said, is reviewing. It was in there for a very short period of time and bounced back up into 73.5. And it's sort of sitting between 73.2 and 73.8. Not saying that that trend is broken, but I am suggesting that there may be some that start seeing that as value. Start suggesting that, yes, the Australian economy is going to have a bit of a headache in the third quarter, maybe not in the fourth, that there is now possibly value even with what's going on in the nation. To watch that is what I'm watching closely, whether or not there's an inflection, whether or not there's a change, and just being nimble around it. As I said, still think the US dollar is the winner here, still think the US data is a winner here, but there is and going to come a point where a 5-cent drop just makes people sit up and start to think, can it go any further? Then let's have a look at dollar CAD. Dollar CAD, considering what's going on in oil, has been very interesting since May. I mean, it got up to $1.27 last week, which is a 5-month high. And this is after having almost 10 months of uninterrupted buying of the CAD. It has dropped back to 125.5, and I understand that. But there is signs here that even the Canadian dollar is just finding it hard to find weakness against the USD. But again, that moderation just makes me sit up and ask the question, is the overall market just asking the question that profit's there and maybe to move away? Because don't forget, it got to, as I said, as high as 127, but it got down to 120 at the start of May. So maybe it could moderate back towards that level. One to keep an eye on. Kiwi Dollar. Considering the RBNZ basically last week told you that there's a 50-50 chance that they'll actually raise rates in August, it's incredible to see that the Kiwi Dollar got to 68 cents. Yes, it's back in 69, but it was as high as 73.5 no more than 4 months ago. And to be not even interested in rate rises shows how strong the USD is. There's still a long way to go, and August is a little way away. And again, you know, the strength in the US dollar is there, but I'm just asking those questions that I think we all need to ask is, at this bottom, with support levels kicking in, is there something that we need to be aware of and maybe be a little bit nimble to the idea that there could be a bit of a snap and therefore the US dollar might take a bit of a pause? It's just something to ponder and again, finalize and finish that with Euro Dollar 117. Remember in May, it was at 121.5 and I had my hand up saying I didn't expect to see it that high. I was expecting to see it 117. But again, just last week, it's just been easing up with regards to where it sits and easing up with regards to that sort of that short position that we've been noticing as well. So all of those put together suggest that maybe the market's just testing itself to see if that real positive in the USD is coming to an end. The next question also is, as I said, the data is still the fundamental key reason that things are driving. The US's recovery has been astounding, and that's not going away anytime soon. It's still my base case and my thesis for what we're talking about right now. But just in the interim, just be aware, I feel the market's testing itself around supports, and therefore, does it mean that the US dollar takes a break? It could.